This is a special focus on the Kiwi dollar. This week is the week of the Kiwi dollar. I know many of you don't trade it, but it's still very interesting. Let's talk about some general characteristics of the Kiwi. So it's a risk currency. In times of trouble, it falls, but not as much as other commodity currencies. And now we're not in times of trouble, as I mentioned. Currently, the market mood is positive. That means that the Kiwi gains regardless of what happens in New Zealand. Okay. Another characteristic, and we'll dive into that specifically, is that many figures are released only on a quarterly basis: jobs, inflation, retail sales, and more. In many cases, it just gets carried away after the Aussie. So we have good news from Australia. Also, the New Zealand dollar rises, and the other way around. Bad news for Australia, and the New Zealand dollar falls. Okay, but it doesn't always do that. It doesn't always follow the commodity camp. So sometimes we do see the Australian dollar rising with oil prices alongside the Canadian dollar, sort of getting carried away, but the Kiwi dollar doesn't necessarily do so. And another characteristic, why I do put more focus perhaps than the new viewers want, is that it consistently enjoys relatively good technical behavior. Not always the best, but sort of it's more consistent in that. Okay, so that these are general characteristics of the Kiwi dollar. Specifically today at 9 GMT, Wednesday, August 10th, it'll be morning of August 11th in New Zealand. The Reserve Bank of New Zealand, Graham Wheeler and his colleagues are expected to cut rates from 2.25 to 2%. This has been very, very well telegraphed. We got all the possible hints about that, and that is priced in. I would go to say that if we have a rate cut of 25 basis points and a hint, that they're going to stay put for some time, no additional measures, then I believe the Kiwi dollar will rise despite a rate cut, okay? Because that's very, very priced in, okay? In general, inflation is quite low and not expected to rise anytime soon. So that's the reason to cut. The strength of the New Zealand dollar is worrying for this guy here, Graham Wheeler, the governor of the Reserve Bank of New Zealand. House sales are cooling. The level of sales, number of sales are cooling because it's midwinter in New Zealand, but prices are still up 8.6 year over year. So this could mean that the Reserve Bank of New Zealand chooses to do some macroprudential stuff. For instance, limit the demand, tell banks that they must demand a down payment, let's say, of 50% of the house before they can take a mortgage. Don't know the exact levels, and this way they could cool the housing market and also lower rates at the same time. Okay, it's kind of magic trick. Usually rates go up in order to cool the market, but inflation is low and the currency is high. Okay, so they could counter a rate cut with macroprudential tools to cool the housing market, especially in the biggest city, Auckland. Okay, there is a potential for more cuts this year. This depends if they hint about more cuts coming, like the Bank of England did. It's of course dovish and it could hurt the Kiwi, and there's a good chance for doing that to keep the pressure because again, rate cuts are already priced in, and there is also an outside chance for a rate cut of 50 basis points from 2.5% to 2%. But that would be sort of a sign of panic, and central banks usually work very, very gradually. Of course, the most gradual central bank is the Federal Reserve. All right, so that's today's event. Again, 25 basis point cut is priced in. Anything more than that, heavy hints of more cuts or a 50 BP cut will hurt the Kiwi. Otherwise, the Kiwi could rise. But that's not the only event from New Zealand. Okay, we have retail sales tomorrow at quarter to 11 GMT. That'll be Friday morning in New Zealand. An acceleration in sales is expected, 1% quarter over quarter in headline sales and 1.2 in core sales. Again, released only once per quarter, very important. And the employment report next week before the show on also at the same time, a quarter to 11. I guess that's the preferred time in the morning in New Zealand. But this report is slightly different. Labor costs have already been released last week. So it's only the employment data, still very important for the Kiwi. The employment change, last time we had a big rise, and the unemployment rate, it was 5.7 last time. Let's see if it moves. Remember, it's a quarterly report, making it more important. Also worth watching, at the same time, we have also PPI, Producer Price Index, again, released only once per quarter. But at the same time, we have the jobs report, and this PPI does not serve as a hint for the RBNZ. It comes after the RBNZ, okay? So it doesn't provide us with a signal. In any case, the consumer price index is more important. But anyway, we have a week full of events for New Zealand, retail sales, employment, PPI, and of course today's RBNZ. And let's wrap up this segment with a deeper look at the Kiwi. So these are the ranges currently for the Kiwi. 71.60 is weak support, further support at 70.50, which also was a double top. Let's zoom out and you can see how this level worked quite well in the past. So that's why I keep it on the chart. Okay, 70.50 here worked as a double top. Below that, we have 69.50. So 69.50, 70.50, 71.60, 72.60, and 73.30 are the lines I'm watching on the Kiwi dollar. The number of pips can be relatively low in Kiwi dollar, but the percentage changes and the technical behavior are quite good, I would say. Okay, so yeah, so that's currency of the week, if you wish, is the Kiwi dollar. Okay, that completes the segment about the Kiwi.